Well, the price of carbon has risen dramatically, with policymakers pressing forward on their net zero emissions goals, especially in Europe, where prices hit a record high last month. That means big gains for the KraneShares Global Carbon ETF, which in just 14 months has nearly $1 billion under management and has doubled in price since its launch. Its holdings consist of carbon offset futures in North America and Europe. The big returns with no outflows to speak of have now convinced KraneShares to open 2 new carbon ETFs just this week. Luke Oliver joins me now. He's managing director and head of strategy at KraneShares. Luke, welcome.
Hello, Kelly. Thanks for having me on.
So, I think that the main question I have for you today is actually about the interplay between the carbon price and the energy crunch that we're seeing worldwide. How would you sort of explain that dynamic?
Yeah, well, it's been a very interesting dynamic. Carbon traditionally has had very low correlations to almost every asset class. That said, we've been in this transitionary period where, as the price of carbon increases, we've seen fuel switches away from coal, which is the worst carbon footprint, over to natural gas, which is about half the emissions of coal. And that's exactly what it's supposed to do: move power generation and industry away from the highest intensity carbon to the lower intensity greener fuels. So that started to play out. We started to see a correlation between natural gas and carbon. Now, that said, what's happened over the last few weeks is completely detached from that. We've seen increased demand for fuel, liquid natural gas in China and India. We've seen a lack of supply on the pipeline from Russia into Europe. And we've seen a real crunch on the supply of natural gas, and then therefore demand for other fuels such as back to coal, oil, and so on, that have really pushed up prices. So the interplay is actually broken down. The rise in energy prices is actually detached from what's been happening in the carbon prices. And if anything, carbon has underperformed. Despite the 118% return since inception, it's underperformed the energy market.
Yeah, it sort of peaked first, if you want to look at it that way. It's also important to note that the carbon price in Europe is dramatically higher than it is in the U.S. markets, both in California and in the Northeast, where it's a very different story. But with these big meetings coming up, COP26 and all the rest of it, you have to wonder if the U.S. is looking to emulate the carbon price in Europe. The problem, Luke, is we're starting to get a sense of the cost. When it is more expensive to produce carbon, that means prices either go up for the end user or fewer people are producing it. I wonder what policy response that might engender. And I guess in the long run, is that actually going to hurt demand for carbon?
No, I think well, there's 2 things here. One, the increase in price in energy, as I mentioned, is way beyond the effect that carbon's having on energy prices. So there's definitely some political risk that people will look towards carbon as a source for that. But it really is. I think the EU put out there's only about 20% of the energy increase, price increase, comes from the increase in carbon prices. And as you mentioned, European carbon is about $70 a ton. California is only trading about $27 a ton, and the northeast of the U.S. is only about $11 a ton. So at this point, the U.S. market is undervalued. It's not trading at its efficient price, which is significantly higher than, or should be significantly higher than where it is. Yeah. So I think we're not seeing any of those effects in the U.S. yet. But what's going to drive the price, aside from every other factor, is the design of these programs to reduce supply. And as you saw in Europe, they're tightening the program. It's gone from 2.2% reduction each year of supply to 4.2%, and they're continuing to buy in the free market in the market stability reserve. So we're seeing both Europe and California going from a surplus in the market to a deficit. So that could definitely drive prices higher. Yeah, and in the U.S.
Yeah, I was just going to say, to point out the difference with other commodities, this one you can't really measure. It's basically a way of it. That's why I joke it's more like Bitcoin. We've just said, OK, the supply of carbon is going to be capped at whatever it is, 600 gigatons left for the world to produce. And so, whatever it costs somebody now to have one of those remaining pieces is whatever they have to pay for it. I guess the question is who wants, other than people, Luke, who look at this and go, hey, great, I want to participate in this carbon price upside. But who are the main people driving demand for the core product? And tell me about these 2 new products you're launching.
Yeah, and just to tie something back here, in the US, because I don't think we've hit the equilibrium price, the true price discovery, I think it is somewhat detached from fundamentals. If you go to Europe, the price of carbon is exactly correlated to whatever the cheapest next alternative to reduce emissions is. So we call it the marginal abatement cost curve. The price will move along that curve. And so there is tangible pricing alongside these, and the U.S. market will move towards that curve as these markets pick up. But as for who's buying this, we're seeing people look at this as a place to add alpha to their portfolio. We're looking at the correlations being significantly low correlations to equities below 0.4, below 0.4 to commodities. We don't even see correlations to clean energy stocks. And so we're seeing people add this as an alternative, as a diversifier in the portfolio. And last of all, we're seeing people actually starting to think, to your point, as prices go up, you could argue everything's been too cheap forever because carbon hasn't been priced. As carbon gets priced in, things could rise, and carbon is actually your hedge against inflation. Yeah. It's your hedge against the drag that could cause on equities as well. So we see this having a lot of uses.